Guaranteed, but economists broadly agree that the Reserve Bank will cut interest rates later this afternoon. But strong employment figures and increasing wages have reduced expectations of big decreases quickly. Joining us for their analysis this afternoon is u.com.au finance expert Jess Brady and BetaShares chief economist David Bassanese. Good afternoon to both of you. Thanks so much for joining us. Jess, let's start with you. Predictions are there will be a rate cut. What do you think Michelle Bullock will do this afternoon, and by how much?
Oh, it's the golden question.
Yes,
most economists are predicting that there will be a rate cut of about 25 basis points today. There have been some outliers who've suggested that perhaps she will go further and do 0.5, so half a percentage point, but my guess is 25 basis points today.
How cautious does the Reserve Bank need to be today to not go too far?
Yeah, look, I think they are always looking at inflation and seeing what inflation's doing. We are back within that target band, and I think that puts us in good stead to do the rate reduction today.
David, your analysis with the latest wage data, unemployment figures, we need to really keep a close eye on that. Also inflation data. How do you think it looks right now? They're the issues that the Reserve Bank studies very closely. What do you think will happen this afternoon?
Yeah, I'm in the camp that they will cut by 25 basis points. I mean, there was a risk they could have gone by more a few weeks ago when there was a lot of volatility in markets around Donald Trump and the tariffs, but things have calmed down, so I think a 25 basis point move is likely. And it's really basically what's happening is interest rates are still at relatively high restrictive levels. Inflation is back in the target band, so they can bring those interest rates back down toward more normal, less restrictive levels, taking the foot off the brake, not necessarily putting the foot on the accelerator at the moment.
We saw the Federal Treasurer just before the election predict that we could see 4 official cuts this year. Do you think that is still possible?
I think 4 is unlikely. I don't think they'll probably go back to normal, so normal interest rate or one that's neither adding to stimulus or restricting the economy, probably be around about 3.25%, something like that, so just over 3. So maybe 2 more. My call is 3, maybe not 4. But we could get 4 if global conditions deteriorated, if Donald Trump and the tariffs caused more mayhem in global markets. But at the moment, my base case is there'll be 2 more this year after this one today.
David makes a good point, Jess, in the fact that even when we saw the turmoil caused by international events, including the tariffs, there are many things out of the control of the federal government, Reserve Bank, that could influence the next decision.
Yeah, absolutely. And look, we see this with money things all the time. I think what needs to be considered is, what does this mean for you? How are you financially protecting yourself? Do you have emergency savings? Have you got, stopgaps in place to look after you should anything happen more broadly? I think we've seen savings rates for Australians go down over recent years. If we do get rate cuts today, it's a wonderful opportunity to maybe boost back up our savings to weather us through tough times.
Great advice, Jess. And David, we appreciate your analysis. Thanks so much for joining us.